Okay, we are back. So apparently I lost internet connection. So I'm not sure what that means for my live stream, but I think it picked up where we left off. So hopefully it won't look too bad in the replay. So as I was saying, so let's get back to talking about JP Morgan Chase. So I'll just kind of go back a little bit. I'm not sure where I got cut off. So what I was referring to is that JP Morgan Chase had 7% increase in revenue, but their net income was down 7%. And so a big reason for that is they are the new issuer or will be the new issuer of the Apple credit card. So in case you guys don't know the backstory behind the Apple credit card, it was originally backed by Goldman Sachs, and that was not a lucrative or profitable deal for Goldman Sachs. And so they wanted out early of their original contract with Apple. Unfortunately, it took a long time to find a new bank that wanted to take on this deal. They spent about 3 years shopping around for a new bank to take on the Apple credit card. I know Synchrony Bank was in the running for this. I believe Citibank was, and Chase was as well. And so we now have found out that Chase will be the new issuer of the Apple card. I'm not sure what that will mean for current Apple card customers. So I will be doing my own research. I'll let you guys know as I know more. But they did spend quite a bit to take on that new deal. And so that is the reason for their negative profitability in Q4. So let's jump right to their stock price. So JP Morgan ticker symbol is JPM, in case you didn't know. And so let's take a look. All right, so you can pretty much tell when the earnings call happened. Wall Street did not respond positively to this latest earnings call. The stock is down 5%. And I'm not totally surprised by that. Again, you mentioned revenue is up, but their profitability is down. And so no investor wants to hear that. And I think there might be some uncertainty behind the Apple credit card acquisition. The Apple credit card has not or was not profitable for Goldman Sachs, hence why they wanted to bail out early the contract. So, how will this impact Chase's bottom line? To be determined. The one thing that will be interesting to see is how Chase will change the Apple credit card. So, in my opinion, the Apple credit card in its current state is a terrible card. It really isn't as good as people make it out to be. It's strictly a cashback credit card with no perks and benefits, right? So, Chase, as we know, they are one of the top travel credit card or top credit card companies right there with American Express, and they are all about perks and benefits. And so it will be interesting to see how Chase, if they do at all, make changes to the Apple card to make it more competitive. For example, maybe adding an annual fee so they can offer some benefits to make that Apple card more competitive than it is in its current state. At its bare minimum, the Apple card is a basic cashback credit card with no benefits, while its competitors, like the Freedom Unlimited with Chase, that offers purchase protection, some travel benefits, right? So there's a lot to be had in order to make the Apple credit card more competitive. But if any bank can do it, I do think Chase can. So we'll see what they do with that credit card over time. I'm not sure when the transition is going to happen, but it will be later on in 2026. So next up, we have Delta. They also had their earnings call this week as well. Oh wait, hold on a second, guys. Okay. Where is? Oh, here it is. Okay, I have it up. I just want to scroll to the exact. Let me come back here. Okay, so this is their income statement. So Delta also did publish their Q4 results, but also their full year results for 2025. So we'll talk about their Q4. Their total revenue is up 3. Their net income is down 50. Wait, hold on a second. Am I looking at it right? No. Oh, I was looking at that totally wrong. Their net income up 45%. Had that wrong. I was looking at operating income earlier. So anyway, this is their net income. So it's up 45% year over year. This is their 2024 result. This is their 2025 result. And then over here in this section, this is their annual picture or annual view. So again, revenue for the year is up 3%, and their net income is also up 45%. Now, Delta had a fantastic Q4 as well as a great year. And this is even despite the government shutdown, which of course negatively impacted revenue during their Q4. And they also saw a slight decrease in profitability due to the increase in pilot salaries from a contract negotiation that happened back in 2023. So that definitely, they would have done better if it weren't for those things. But even with those things occurring, they still had a pretty great year. Now, they mentioned that a big reason for that is they've seen a big increase in business travelers. And so, as you know, business travelers, they tend to opt for, the higher end seats, whether it's first class, Delta One, even Delta Comfort Plus. They also tend to have more activity when you have frequent business travelers. And of course, they did fantastic with their co-branded credit card with American Express. And so they just have had a great year. And they definitely do see more to come in 2026. So, and I am a Delta girly. Delta is by far my number one favorite domestic airline. And I just think they're great. So I'm definitely a bit biased when it comes to that. And so, last but not least, for today's weekly recap, well, actually, before we do that, hold the phone. We need to look at Delta's stock price. Let's do that quickly. Now, I have not looked at it before this moment, so we're going to look at this real time together. Okay. Very interesting. So their earnings call was on the 13th, and so the stock took a dip, and it's kind of been, doing this weird trend in the last couple of days. It's only down 3% this week, which isn't terrible. But I'm kind of surprised considering they had a really great quarter and a great year. I would have expected to see a nice increase in the stock price, at least the opposite. I thought it would have been up by 3% minimum, maybe 5 or 10%. So this is pretty interesting. So just kind of level set everyone. Normally, when a company has a great earnings call, meaning they had great revenue results, they're profitable, they're seeing strong demand in their products and services, they have positive forward-looking guidance. Usually Wall Street responds positively to that, right? They are confident in the company, so the stock price tends to increase right after an earnings call. And the opposite is usually true as well. If a company has an earnings call and the results aren't great, meaning they've seen a decrease in revenue, they're not profitable, or a decrease in profitability, the stock price usually will take a hit, understandably so. But you will have these mixed results sometimes where a company can have a great quarter, a great year, increased revenue, increased profitability, and still see the stock price take a hit. Now, part of that could be the overall market because, as we know, there's a lot going on here in the US. Won't go too much into that, but there's a lot going on between the White House and international affairs. So you also have that on top of whatever the company is going through individually or that industry. So there's never one thing that's impacting a stock price or the stock market. So there's probably some of that impacting this stock movement as well. So moving on, let's now talk about BlackRock. BlackRock like owns everything in this country. It's crazy. They are a private equity firm, in case you were not aware. And so they also published their Q4 earnings and their 2025 earnings as well. And so for the year, well, actually, let's look at the quarter. I believe that's here. Yes. So for Q4, their total revenue is up 23%, and their net income is down 26%. And then their revenue for the year is up 19%, while their net income, where is it? It's down 13%. So definitely very interesting to see. Rock, they're like eating up every industry. They're acquiring every company possible. It's quite interesting. So let's take a look at their stock price. I also did not look at it before this call. Their ticker symbol is BLK, in case you were wondering. Their stock is very expensive, as you can see. So if we look at the last 5 days, so their earnings call was January 15th. And very interesting to see. This kind of goes to a few minutes ago, where you have a company that had great revenue results, but not in terms of profitability. Their profits are down year over year. But even with that, their stock is up 7% this week, which is quite interesting to see. So again, it's always a mixed bag. You never know how Wall Street is going to respond. But what I will say is you should never follow trends, right? So as an investor, you have to do what makes sense for you and go off of your educated guesses, because they're all guesses at the end of the day. Whether you work for BlackRock or a fancy hedge firm, or you're a regular person like myself who's investing, they're all educated guesses at the end of the day. But you never should just follow a trend. What I mean by that is, oh, I see BlackRock is up 7%. Let me go buy some BlackRock stock. And the opposite is true too. If you see a stock is down 15%, doesn't mean you should automatically sell that stock either. So it really comes down to your short-term and long-term goals, what you are comfortable with as an investor, and doing your research before you make an investment. That's the one thing that many people don't do enough of. Many people are investing blindly, right? They're investing based on name recognition. They're investing because their coworker, neighbor, best friend, husband, wife, whomever gave a recommendation, or they saw something on CSNBC or Fox, right? They're just taking things from all different places and just making investment decisions blindly. Now, while you should take in information from all sources, you have to kind of filter through the information that you're receiving. So what does that mean? You see a stock or investment recommendation, you then decide, well, how does this fit into my portfolio? Do I understand the thing I'm looking to invest in? That's one rule of thumb you should always follow. Never buy into anything you don't understand. So do some research, get educated, and then make your investment decision. So that's one thing everyone should be focused on for the future, is getting more educated. Now, you don't have to know every single thing, but you should have some kind of vetting process to determine whether or not an investment makes sense for you to make or not. And I mentioned this in previous lives, and I'll say it again. When you apply for a job, right, no one just hands you, in most cases, no one just hands you a job, right? They put you through a vetting process. So you have to apply, submit your resume, do a screening with HR, do a few rounds of interviews, background check, references, then they offer you the job. So they have this process they're putting you through before they hand you a job offer. So, as an investor, you should be doing something very similar. So, when you receive an investment tip, whether it's a stock, index fund, mutual fund, crypto, whatever the case may be, what are your requirements to like check off your boxes before you make that investment, right? I like to call it an investor checklist. So you should have like 3 to 5 things you are looking for as an investor to determine whether or not you make the investment, right? And when you do this vetting, you could have a few outcomes. It could be, yes, I make the investment, or it's like, yes, I want to invest, but I'm going to wait to see something, whatever you're looking for. Or 3, it's a no. But you want to vet this investment first before making that decision. So again, it can look different for everyone. You might care about revenue performance. You might care about cash on the balance sheet. You might care about dividends. There's so many things or metrics you could be looking at as an investor, but you must determine what those metrics are and then kind of keep them in here to say, I'm looking for these 3 to 5 things, and yes, I'll invest, or no, I won't. So, and as you get more sophisticated as an investor, your requirements will also change. You might look for more in depth metrics, you might have stricter requirements. So, things like that. And you have to think about how hard you work for the money you earn. So, you're handing a corporation your money, they have to like earn it before you just hand it over blindly. But unfortunately, many people are just handing the money blindly and just like hoping for the best. So we want to move away from that. So that's it for this week's weekly recap. Okay. So if you are someone who's newer in your investment journey or you want to learn a little bit more, I do have my ebook called Stock Market Investing for Beginners. In this ebook, I do break down investing in a way that's very simple and very easy to understand. So I do have that linked in the caption down below. I also, I don't know if I have it in the caption now, but I can also add it. If you are looking to invest in things like gold and silver, I do have a great app that you could look into. It's called Vaulted. So Vaulted is a great app because it gives you the ability to buy gold and or silver with when you are working with a smaller budget. So for example, when you are looking to buy gold with like Fidelity, for example, they have a minimum threshold you have to have in order to make the investment. I think the minimum is like $2,500 to buy any precious metals with Fidelity. And most brokerage firms have that. But if you don't have 2,500, but you want to invest still in gold or silver, that's where a platform like Vaulted comes into play. So Vaulted gives you the ability to invest in gold or silver regardless of your budget. So for example, if you only have, let's say, $50 to buy some gold, you can buy $50 worth of gold in the Vaulted app. Now, just to clarify some things, so the gold and silver you buy from Vaulted is investment grade gold and silver, meaning it has a purity of 99.9%. So there's that. They will keep the gold at their vault, or you can have it shipped to your home. They will charge you a fee for that. And they make it very easy to buy and sell. You just link your checking or savings account to the Vaulted app. You transfer money into the app. Once it clears, it takes about a couple of business days, then you can make your purchase. Really simple, really easy. And when it's time to sell, you can easily just sell your gold and silver in the app as well. So I don't have it in the caption right this second, but I will put it. Actually, I can put it in the chat. Give me 1 second. Let me grab that link. I think this is the one. Okay. decided to invest in gold and or silver. So I have that in the chat, and I will put it in the caption of this video once this live is over. And so in case you didn't know, gold and silver have been doing phenomenally well. Silver especially, just to kind of show you guys context. In the last 5 years, silver has increased over 262%. Look at this graph. There are few stocks that have performed this well in a 5-year period. Even in just the last year, silver is up over 180%. Crazy. I want to say it was this time last year, silver was $31.50 and change. And now it's almost at $90, which is crazy. Then if we look at gold, gold also has, oh, not that. That's not what I wanted. I didn't want gold.com. Futures. There we go. Gold also doing phenomenally well. So gold is up over 150% in the last 5 years. And then in the last year, it's up about 70%. So silver definitely is outperforming gold in terms of rate of return or percentage increase. But both precious metals are doing fantastically well. So if you're not already investing in things like gold or silver, you should seriously consider doing so. It's a great way to diversify your portfolio without it being overly complicated. So again, I have that link to Vaulted in the chat, and I also put in the caption down below. But with that being said, have a great weekend, guys. I'll talk to you guys next week. Take care.